Hi guys, and welcome to our weekly trading idea. This is Walid speaking, and in today's video I will explain why the market is very choppy lately and the best way for trading it. Also, I will highlight the most important news of the week. You may be finding trading frustrating now, especially if you are active from a day-to-day perspective. First, let me talk about the fundamental reasons behind this. It's the battle between risk sentiment in the market, positive and risk sentiment. Starting with positive sentiment, we all know that a vaccine is coming soon and the Fed will fill any gap with extreme stimulus measures and life will carry on as before. On the other hand, we have COVID-19 nightmare. Infections are rising and the US is in a second wave now. All this raises questions about further lockdowns and job losses. You can see now why the market is choppy. That's why I personally change my trading type depending on the market conditions. Because now the market is not swingy, so it will be hard for swing traders. Day trading and some hit and runs will be the best way for trading this market. Now the technical reason behind this is low liquidity and low volatility in the market. If you check the Volatility Index, so this is the Volatility Index chart. If you remember, this high volatility was due to the coronavirus pandemic and the crash in the stock markets. After the lockdown easing, the volatility dropped sharply and it's near the pre-coronavirus situation. And it could be heading to fill the gap of February. Because remember, next month is August, which is among the slowest months of the year. I see a lot of traders stick to one type of trading, like saying I'm a swing trader or I'm a scalper, I'm a day trader. I personally trade depending on the market condition. If the market is with low volume, low volatility, I choose day trading personally. I go for 50 or 40 pips targets, like hit and runs. And with high volume, I definitely scale out my positions with bigger take profits. Let me give you an example. Notice how this month was very choppy on euro. It was definitely very hard to trade it as swing trading or long-term bias. But if you go to the 4-hour time frame, notice trading the supports and resistance is very attractive because the risk reward is very good, above 3. Notice if you take, even if you hire your take profit, it will be 1 to 3, which is amazing. Also this support, notice the reaction on this support. Notice the big bouncing here. So it will be great idea to take advantage of these levels. As you can see, like small moves. Of course, you can wait a rejection or a pattern like this evening star or this hammer. That's why I want you to draw your supply and demands and supports and resistance on the charts in such environments and condition. Looking at the economic calendar of this week, we have a busy calendar. It might be a volatile week, but I think with small ranges of movements. We have 2 central banks meeting, the Bank of Canada meeting on Wednesday. Also, we have the ECB on Thursday. With CPI and core retail sales reports on the US, it will also track the recovery. And speaking about the Bank of Canada meeting, let me go to the USD CAD chart. Looking at the daily chart, notice we have an inverted Elliott wave. We might be heading to the 5th wave now after the correction 4. We have a possible head and shoulder reversal pattern. The uptrend is very small, but still it's a reversal pattern. This is the 5th rejection for the trend line, a strong trend line. Yes, it's a reversal pattern, but it will trigger a continuation of the trend, the long-term trend. So a break for this blue area, which is the neckline, could lead to a drop to 1.337 at least, with about 100 pips movement. So that is it for me this week. Thank you guys for listening and hope you are getting benefit from these trade ideas. Please comment below. Let me know what do you want the next video to be about, and I will see you next Monday.